What's going on, guys? In this video, we're going to be talking about the Nasdaq 100, or the QQQ, Q's for short, and should you invest in this ETF? And just remember, this is not financial advice. This is purely for education, entertainment purposes only. Do your own research before you start investing because it can be risky. This ETF is comprised of all the stocks you see on the screen right now. This is a heat map of the Nasdaq 100. You could easily see it's all the big tech stocks that everyone's been raving about all year, every year for the past decade. But before that, I want to give a shout out to my favorite app to use. That is Delta Investment Tracker. This is such a great way to track not only all of your stocks, but all of your cryptos in one spot. It takes the stress and hassle out of managing it yourself and just displays it beautifully on your phone for you, everything in one spot. Your cryptos, your stocks, your futures, your currencies. If you want to check them out, there is a link in the description to download the app. It is completely free to download. And on top of that, they are offering the pro version for free with my promo code, which is also in the description. So go check that out and save so much time with your portfolio tracking with this app. But let's dive back into the video. So to answer the question right off the bat, yes, I'm not wasting any time. An ETF like the NASDAQ, you could see right here, 9 times out of time is a better bet than cherry picking stocks. Yes, if you dove into Tesla or PayPal 5 or 10 years ago, and that was your only position, you're massively up. But for the average trader, they don't make major risks like that, and you got a lot of losing bets as well. It's all about statistics and probabilities in the market. And you could see this tweet, if you want to check out Charlie's channel right here, well, his Twitter, it's got a massive following, so he's got some great tweets going on. But this was back on November 19th, 2021. All of our lovely coronavirus stocks that skyrocketed throughout the years, made a lot of people a lot of money, are down significantly, including one of my favorite stocks, PayPal, is down 37% when he posted this tweet. We got some other big ones like Zillow, Chegg, over 70% correction. So this is massive. And during the same time he posted this, the NASDAQ 100 was down 0%. That is the beauty of investing in an ETF like this. You don't have to worry about cherry picking the winning stocks, because when they turn sour or they go into a correction, you still have 99 other stocks to rely on within this ETF. In fact, here is the breakdown. You can see it is massively in the technology sector. 46% of the NASDAQ 100, or the Qs, makeup is technology stock. Then 18% and 17% are communications and consumer. So yes, it's pretty concentrated there. But then you have all of these smaller ones as well: utilities, financials, industrials, consumer defense, and healthcare, that we don't know what the next 10 years is going to hold. Maybe these are going to be the markets that take over, and the NASDAQ 100 has your back there. In fact, if we want to jump over and see what is in the QQQ ETF, let's go to holdings. This is stockanalysis.com. Here's every single stock and their portfolio weight that's within this ETF. And here's the beautiful part about investing in ETFs. So we got a couple of these stocks down here: Fox, Peloton, Fox again, Insight, which I've never heard of. There's a bunch of these stocks that we have never heard of that, for all we know, these are going to be our big winners in the next decade. And it's wrapped up in the NASDAQ. And if they're not, we don't have to worry, because currently it's such a small position. And every single quarter, if we zoom in here and you could read this little blurb, the fund description, every single quarter, the fund and index are rebalanced and then reconstituted annually. So there's a constant cycle of stocks in and out, especially for these lower ones. So say SiriusXM just falls through the cracks, which I really don't have much hope for it, but let's say it falls through the cracks, it'll drop off of the NASDAQ 100, or I guess there's 103 of these stocks, probably because of Fox and Google. And there's probably another one that has a duplicate ticker, so it's just holding both of them. But company-wise, it's only 100. So if you're asking why is there 103, it's because here's Fox twice. It has 2 tickers. And if we go all the way to the top, there's 2 tickers for Google. And I'm sure there's 2 tickers for another company somewhere in here. That's how we get to the 103. But If Sirius XM falls off the charts, plummets into a correction, you don't have to worry about it. You don't have to manage it because it's just going to drop all the way down and drop off, and they'll rebalance it for the next stock that's in line, and that will be added to it. And again, one of these smaller stocks down here, the bottom 10 from 90, well, I guess from 89 all the way to 103, if one of these stocks become the new big stocks, you already have this fund investing in it for you. Say it's CDW, whatever it might be, because in 10 or 20 years, the top 10, your Apple, Microsoft, Amazon, Tesla, Nvidia, Google, Facebook, Adobe, Netflix, and Costco may not be the winners anymore. 10 years ago, Facebook was definitely not up here. Facebook was not a $1 trillion company, but it was part of the Nasdaq, and it was probably within the mid 50s and 60s. Not too many people had their eyes on Facebook, say 10 years ago. They thought, oh, it's too volatile, it'll never become one of the big players. And sure enough, here it is. Now, one question you might have, which is very important when you're investing in an ETF, is what is the expense ratio? So if we jump over here, you could see Invesco QQQ's total expense ratio is 0.2%. That's not that bad. Yes, it's a lot higher than, say, the S&P 500, but when you're looking at something that's going to have all of these big tech stocks and you think that the tech revolution is still here, that's not that bad, paying 0.2%. And over the long run, it definitely paid out. This is since 2018. So we're looking at maybe 3 years back, a little less than 3 years back. We're up 144% for the Qs. Meanwhile, if we look at the SPY, it's only up 87%. Now, I'm not saying this will always happen because we don't know what the future holds. But the point of this is if you want to make this big bet in the tech stock industry, your best bet is probably investing in the Qs. This is not financial advice, but a lot of people would tell you the same thing. You're better off investing in ETF instead of cherry picking stocks, because if you put all of your money into Zillow, which is ticker symbol Z at the top, you're not looking too pretty right now, down 71%. But if you invested in the Nasdaq, you'd be down 0%, at least when this tweet was posted back on November 19th. Now, some of you may say, well, the Nasdaq 100 is a good concept, but it's so overweight with the top 10 stocks, which it is. If you add this all up, look at this. Apple and Microsoft make up over 20% of the entire index. And if you add up the top 10 stocks, it's over, I think, 55%. Which may be an insane amount, because what if these top 10 stocks go down? Well, don't worry. There is something called the Nasdaq 100 Equal Weighted Index, and this is QQQE. So this is equal weighted. And if we go to the holdings, you could see all of these holdings are almost exactly the same. Every quarter, it will rebalance to 1% in the top 100 stocks in the Nasdaq, and then it'll play out for the quarter. So you can see this quarter, both Dollar Tree and AMD had an amazing run, and Nvidia. Dollar Tree and AMD are not in the top 10. Nvidia is, but these two aren't. So that's why these assets are really contributing towards the equal weighted ETF. And then if we scroll to the bottom, look at this. Google really wasn't performing, but it's okay because only 1% allocation was given towards it, so it's not going to really affect you as much. Same with PayPal. But if we jump back to the Qs, look, Google made up around almost 8% of the entire ETF, and Google hasn't been doing too good this quarter. So that may be weighing down on the regular Qs. So there is this option right here, the equal weight QQQE ticker. But if you look over the long run, this is the Qs, the original Qs, up 141% during this 3-year period. Meanwhile, the equal weighted Qs are only up 92%. So that is something to consider. We could zoom out even more if we want. Let's go back to, say, 2015, or, I always want to go back as far as possible. This started back in 2012. So if we go back to right around 2012, it's up 371%, as opposed to the original Nasdaq 100, or the Qs, 13, 12, it's up 591%. So just because it's equal weight doesn't necessarily mean it's going to perform better, but the option is there. Who's to say in the next 10 years this may have better performance than your regular Qs? So where can you buy the Qs? Well, pretty much on any platform. This is TD Ameritrade. This is where most of my money is wrapped up in. You could easily buy it. The ticker symbol is QQQ. It is currently trading for $393. Just like you would buy any stock, you would hit the buy button. You'd put in exactly how much money you want to put in, your amount of shares, all that good stuff. It's just like a stock. You can buy it on your phone as well. Let's say you don't have $393 to invest in. Well, that's okay. You could jump over to Robinhood, and here's the Qs as well. And then you could put in a market order of however much. You want to only put $1 into it. Robinhood allows you to do that. And on top of that, if you're asking, yes, both Robinhood and TD Ameritrade has the QQQE. This is the equal weighted one I was going over. So if that's more your style, you could invest in that one as well on both these platforms. And I guaranteed, not going to say I guaranteed, but pretty positive almost any other platform you're using, especially any kind of American trading platforms, you'll be able to invest in both the Nasdaq and the equal weighted Nasdaq. But there you guys have it. That is the Qs. I think it is a sound investment if you want exposure to all of these massive tech stocks, but you're worried about picking potential losers in the future. You could just go the Nasdaq 100 route, the Qs, and this is all your exposure right here. If Microsoft and Apple fall off the face of the earth, and maybe some of these smaller stocks down here end up eating up the market cap, like maybe Micron Technologies that may have some pretty good potential, or AMD. What if these two companies become the big ones in the future? Well, you have the exposure within the Qs. But that's all I got for you guys. Let me know your thoughts. Smash that like button if you like this video. I hope this was helpful for you to understand exactly what the Qs are, what the Nasdaq is. And as always, I will see you guys in the next one.